Welcome to this video, which is on Monday, January the 30th. Now, in terms of today's video, what we're going to be doing is looking at the state of global financial markets and the potential for a crisis or a crash to occur. And I think actually the odds now have dramatically increased for a big meltdown in global stock markets and a big move away from risk. Now, obviously, over the last few years, many analysts have been warning the global economy could go into meltdown, and it hasn't happened yet. But I think now we're getting very close because there is a trigger which is coming into play, and it's basically Donald Trump. Now, in terms of Donald Trump's economic policies, they will be good, in my view, for US economic growth. However, they will trigger serious problems in other parts of the global economy, and basically that is where the crisis is going to come from. We'll see a big move from risk. Stock markets are already at bubble levels, so they've got a lot of potential downside. I think the crash that could come will be far bigger than 2008, and unlike 2008, central banks are not going to be able to stabilise the situation. Now, what I want to do is basically go through the reasons I think we are going to get the crisis pretty quickly. Then what I want to do is look at how we can basically protect ourselves in the Forex markets and make profit from the event. Now, no one wants to see a global financial crisis, but as Forex traders, we do have the opportunity to protect ourselves and make profits. Now, what I want to do first of all is just give a summary board of the real problems that I think are going to emerge and why I think they're going to emerge. And I want to talk through the points in more detail. So here is the summary. I'll be back in about 2 minutes to discuss. I will go back up that short summary there. Now, in terms of what I want to do now, I just want to go through some of the points in a little bit more detail that I made in the summary, and then I want to look at the currencies that will be big winners if we have a big move from risk, and those that are going to be the big losers. Now, in terms of Donald Trump's economic policies, they are going to create growth in our view, and basically they're going to raise inflation, or see inflation rise at a quicker rate. Now, in terms of this, what we've got to keep in mind is, sure, the policies are going to be inflationary, but the Fed was already behind the curve before Trump became president. They should have hiked rates a year ago. Now they face the prospect of raising rates even more quickly than they would want to. They've penciled in 3 possible rate hikes this year. It could be more. Now, in terms of rate hikes in the US, obviously that means the US dollar is likely to strengthen, particularly on emerging markets. Now, there's a huge amount of dollar-denominated debt in emerging markets. It's now got more expensive to repay, and it's going to get even more expensive to repay. You will see defaults. You also see capital outflows from emerging markets. They rely on capital inflows. Many emerging markets are going to face serious difficulties this year. If we take China, it's already suffering serious outflows. China has been trying to stabilise its currency, the yuan, by spending its foreign currency reserves. However, it's burning through money at a very quick rate, and it's now almost a situation critical in terms of the reserves it's got left to do this. It looks like a losing battle anyway, so China might just decide to devalue the yuan. That would certainly create a crisis in our view. And yeah, in terms of, if we go to Trump's policies on trade, it's America first, it's protectionism. And we've seen him talk about this already, and now he is basically backing up his words. Now, in terms of, you've got a possible trade war coming with China. Now, that is probably the most serious one in our view. Relations are already not good between the Trump administration and China. Obviously, big disputes over the China One policy and the disputed atolls in the South China Sea, which China has occupied. Now we face the prospect of possible tariffs on Chinese goods from America. It's not good news that the 2 biggest economies in the world are basically not getting on. But of course, you've got the prospect for tariffs in other places as well. Trade wars are simply not good for risk sentiment. Now, in terms of China, I've already mentioned obviously about the problems they've got with the yuan. They just have huge problems internally anyway with debt. No country ever in history which has created debt of the magnitude of China at such a fast rate has avoided a crash. China will not avoid a crash. Obviously we've been saying for a while we think China is going to have a hard landing. It will have a hard landing in our view. Trump's policies could accelerate it. Let's keep in mind that China has powered growth since 2008 in the global economy. It hasn't been the US, but it's done it by just creating a massive debt load. Now, it cannot create growth at the rate that it did before. It's basically slowing up dramatically. The bubbles in China, housing market, the stock market, they will burst in our view. So China could be a trigger for a crisis as well. Now, in terms of, if we go over the Eurozone, mentioned, there is a banking crisis there, especially in Italy, where the oldest bank in the world recently went down. Other banks could follow. But it's not just Italy that has a banking crisis in the Eurozone. There's banks in trouble all over the zone. And one that hasn't been in the news much, and we've actually done a video on the bank, which you can look up, is Deutsche Bank. It has got a really low capital base against its debts and its exposure in the derivatives markets. Now, its exposure in the derivatives markets is several times the size of Eurozone GDP. Now, in terms of the 2008 crisis, obviously Lehman's went down. That was very much a second-tier bank. It wasn't a global heavyweight. Deutsche Bank is a global heavyweight. If it goes down, it will create a crisis. And it actually, it's so tied in with the ECB, it could actually mean the end of the euro. Now, in terms of Eurozone itself, there's no real growth being created in the zone at all. And the ECB will not be stopping their negative interest rate policy and their printing of money. They're providing solvency for countries. That is continually impacting on the banks. Also, you face a rise in the populist vote in Eurozone. So what happened in the UK, what happened in the US could well happen in Eurozone as well. So it's got real serious problems. I mean, they haven't been in the news so much recently. It's been all about Mr. Trump, but Eurozone, real problems in terms of what it faces going forward. Now, if we go over to the Japanese economy, that is in dire straits. The central bank policies have totally failed. All Japan has done has been creating debt as well. That is what central banks around the world since 2008 have mostly been doing. Cutting interest rates, printing money. What has this led to? Money flows into the stock market. Stock markets are at bubble levels. They have been for a while. They do not reflect the economic fundamentals at all. Now, they have been extremely strong, okay, and defied a lot of analysts' predictions on how far they could go to the upside. But my view is those stock market bubbles they're on borrowed time now, and with all the problems in the global economy, we could see a downturn at any time. Now, in terms of the global economy, is just full of debt. Central banks have caused this, and you haven't really got any growth in the global economy. Okay, the US is doing okay, but where else? China is slowing up, Eurozone is getting nowhere, Japan is getting nowhere, emerging markets are going to be hit by basically Donald Trump's policies. There is no growth in the world. It's the lowest since World War II. International trade, lowest levels since 1958. So, there's plenty of potential catalysts for a crisis. And obviously, you've always got the potential for a black swan event coming, one that no one expects. It could be political, it could be economic. You just don't know. Black swan, by its definition, no one sees it coming. But we do have a situation now where I think markets are nervous. It's not going to take much to tip the stock markets to the downside and create a move to risk off. Now, obviously, if you have got financial crisis in the world, it's the Japanese yen that is going to be the safe haven currency, and that is, in our view, a great currency to focus on longer term. We see it as a buy on just about every major currency. We think the yen will be the currency that surprises us this year. A lot of people were saying last year the yen is going to go into free fall. It won't, because you get a move from risk on to risk off, the yen will go higher. And if we take the USD JPY, a move to risk off, a serious one, a crisis, you can easily see USD JPY down at 80. If you look at the JPY on the commodity currencies, at the moment it looks a very attractive buy. I would just sell AUD, NZD and CAD on the JPY as longer term position trades. I think they will do very well. They've got very well defined risk to reward. Obviously, in terms of emerging markets, they're obviously a sell. So Japanese yen is the currency really to focus on. Obviously, if there is a big move from risk, USD, it's the world reserve currency, it is going to do well. We favour it on the commodity currencies and the emerging market currencies. Now, other safe havens against the commodity currencies in particular that could be looked at, a good risk reward, Swiss franc, Singapore dollar. A currency I think that could surprise this year is actually the British pound. Okay, now the British pound is oversold anyway. Okay, and if we do get a financial crisis, it will hold up far better than the commodity currencies. And I think, as a long-term position play, GBP on the commodity currencies looks extremely attractive. I think the pound is going up anyway, even if we don't have a financial crisis. It is so oversold. If we do, it's going to do better than the commodity currencies. It's already had a decent rally up at the time of me doing this video, and I see far more strength to the upside. Now, in terms of a financial crisis, we don't want one really, but in terms of as forex traders, we can basically make money from the event, and just by selling risk currencies on safe haven currencies, I think is a good strategy. In terms of the crisis itself, like I said, don't know when it's exactly going to come, but it's getting closer, and I think we are going to see more risk off anyway. So there will be some great potential trades to be had in the forex market. So hopefully I didn't miss anything out that I wanted to say. I think I covered all the points that I was going to. So that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.